David Burrows is here from Barometer. We're talking North American large caps at 1-855-326-6266. Scarborough, Ontario now for Nazar. Hello.
Oh, hi, gentlemen.
Hi.
David, with the recent Fed decision of prospective rate increase at the end of this year and 3 more next year, is Manulife a stock you would own now and hold? Also, the recent geopolitical noises in the Korean Peninsula, and given Manulife's extensive exposure in Asia, what do you see as a risk to this stock? One more question quickly, please. Manulife recently settled a class action suit with approximately $70 million waiting to be distributed. Does this charge have an impact on the price of this stock? Thank you for taking my call.
Thank you.
It's a very well thought out question. So let's just revisit the concept of insurance companies. Really, when you buy an insurance company, you're buying a giant investment portfolio, right? Their ability to take the float that they've been given by their policy holders and invest it and generate a return in excess of the cost of paying out the claims, in effect. Now, of course, Manulife has an investment services business and so on, but really that's what you're buying. So we are very constructive on the world's economic condition. We're very constructive on the equity asset class, and we believe that it is likely that we've seen the generational lows in interest rates. So first of all, if we thought that possibly for the next 15 or 20 years we will slowly see long-term interest rates rise, that's a huge benefit to an insurance company. If we think that we are in a structural bull market for equities in general, again, that's very positive for an insurance company. If you look at Manulife itself, it's done a very good job of building a strong franchise in Asia. And while there will always be geopolitical risks in all parts of the world, realistically, there's a growing consumer class who are very interested in the types of products and services that they provide. So I am bullish. We are a shareholder of Manulife. Again, it's one company. We like the insurance sector as a whole, given the current environment that we're in. And I think it's generally underowned because they've had a headwind of falling interest rates for 25, 30 years.
What of that legal issue that Nazar was mentioning?
So I'm going to say that this is not something that the market doesn't know about. It's in the price, and it is not something that is likely to recur in the future. So I wouldn't spend a lot of time thinking about that.
Well, I don't think there are many who anticipate the U.S. president will make good on his threat to destroy North Korea. If there was a military scenario on that peninsula, does that change the investment thesis?
Look, if there's a military scenario, it's going to have an impact on a lot of things. But even that, history has shown, tend to be relatively shorter-lived.
Nazar, thank you for joining us from Scarborough. We're going to go to John in Newmarket now. Hi, John.
Hi. Your opinion on Canadian Western Bank?
All right. What do you think?
So Canadian Western Bank has had a wonderful rally. I mean, the stock's come back from $23 to $32. If you believe that oil prices may be stabilizing to some degree, certainly doesn't hurt that company. We are more constructive now on energy than we've been in some time. And so that is a help to Western Canada. In general, I prefer U.S. banks to Canadian banks currently because I think the delta of improvement in the U.S. is going to be a little better than Canada. But certainly Canadian Western Bank is acting great, and I wouldn't have a problem owning the stock currently.
Thanks, John. We're going to go from Newmarket to a commercial break. It's your that's it for all the calls, the emails as well. Thank you so much. We're going to come back and look at the top picks.